Hey everyone, and welcome to another deep dive. Today, uh, we're diving headfirst into Bank of America's 3Q 2024 earnings. You've sent over their press release investor presentations, the works. We're talking a serious amount of financial data to unpack. But that's why you have us, right?
Absolutely. We're here to try to cut through the noise and figure out what's really going on with Bank of America, how they're performing, and what their outlook is for the future.
Okay, so first things first, they posted a net income of $6.9 billion this quarter. That's a huge GE number, even for a giant like Bank of America. Seems like they're firing on all cylinders, but I'm sensing a but coming.
Yeah, you're right to be cautious. While the headline numbers look great, the bank is sending some mixed signals about what the road ahead looks like. Their economists are forecasting a soft landing for the economy, which sounds all right on the surface, but they're also predicting a trough in mid-2024 that suggests some potential turbulence ahead.
So smooth sailing for now, but maybe some choppy waters on the horizon. It makes you wonder if their CEO, Brian Moynihan, shares that cautious sentiment.
He actually addressed this directly. Moynihan pointed out that consumer spending, a key driver of the economy, is growing at a slower pace. It's up about 4% from last year, which is actually more in line with pre-pandemic levels than the robust growth we've seen recently.
That's an intriguing detail. It's like we're snapping back to a more familiar reality after this period of unusual economic activity. I have to imagine that this slowdown has some pretty significant implications, especially for a bank like Bank of America.
It absolutely does. A 4% growth in consumer spending, while not terrible, could signal a shift in consumer behavior, especially with interest rates on the rise. Think about it. This might make certain sectors more attractive to investors, while others might lose their shine. It also raises the question of how the bank will adjust its lending and investment strategies in response to this trend. This is definitely something to keep a close eye on.
Okay, so we're seeing strong financial performance, but with a healthy dose of caution about the future. Let's dive a little deeper into the numbers themselves. One thing that jumped out at me was Bank of America's focus on organic growth. They're adding a ton of new customers, even with the economic uncertainty.
That's right. They opened a staggering 360,000 new checking accounts this quarter alone. And get this, that's 23 consecutive quarters of growth. It really highlights the strength of their retail banking franchise and their ability to attract new customers.
That's a mind-boggling number of new accounts. 23 quarters in a row. That's not luck. That's a well-oiled machine. What's particularly impressive is that they're not just attracting new customers, they're also deepening those relationships. They opened 1 million new credit card accounts this quarter, which tells me they're doing something right when it comes to cross-selling and building loyalty.
They've certainly mastered the art of attracting and engaging customers, but there's a flip side to every coin. We also need to consider that average deposits are down slightly this quarter. Now, this could be attributed to a few factors, but it's likely connected to the rising interest rate environment we talked about earlier.
Ah, so customers might be shopping around for better returns on their money, especially those with larger balances who are more sensitive to interest rate changes. It makes you wonder if this is a sign of things to come.
Huh.
Are we going to see a significant outflow of deposits as interest rates continue to rise? And how would that impact Bank of America's overall liquidity?
That's the million-dollar question. And it brings us to a crucial aspect of Bank of America's financial position, their liquidity, because they've been sitting on a mountain of cash, and managing that cash in this volatile rate environment is no easy feat.
You're telling me it's like trying to walk a tightrope during an earthquake.
Yeah.
One misstep and things could get shaky. And speaking of shaky, I can't help but think about all those headlines about the commercial real estate market and how that might be impacting Bank of America.
That's a great point. It's certainly a factor to consider, especially given their exposure to office loans. We'll definitely want to delve into that aspect in more detail to understand how Bank of America is navigating those risks.
Absolutely. So we've covered a lot of ground already. Strong earnings, a note of caution for the future, the impact of rising interest rates, and those intriguing details about consumer spending. But there's still so much more to uncover.
You said it. This is just the tip of the iceberg. You mentioned Bank of America's massive cash pile. Managing that in this environment brings us to their held-to-maturity HTM securities portfolio, which has been getting a lot of attention lately, and for good reason.
Right. It's like they've got this treasure chest full of investments, mostly bonds and mortgage-backed securities, that they're planning to hold until maturity. But this rising interest rate environment has thrown a wrench into things, hasn't it?
Yeah, it has. You see, when interest rates go up, the market value of existing bonds goes down. It's a bit of an inverse relationship. So even though Bank of America isn't actively trading these HTM securities, the rising rates have resulted in some paper losses, what we call unrealized losses.
Okay, I get it. But
Yeah.
why are analysts so fixated on these unrealized losses? After all, they're just that unrealized. It's not like Bank of America is actually losing money yet.
That's the key point. Yet, analysts are concerned because if Bank of America ever needs to tap into that HTM portfolio for liquidity, say to cover unexpected losses elsewhere or meet regulatory requirements, they might be forced to sell those securities at a loss. And that could directly impact their capital levels, which are crucial for any bank stability.
So it's all about having enough of a financial cushion to weather the storm. And these unrealized losses, even though they're on paper, could potentially shrink that cushion.
Exactly. And to add another layer of complexity, remember those proposed Basel III capital rules we touched on earlier. Those could significantly impact how much capital Bank of America, and all banks for that matter, are required to hold in the future.
Oh, right. Those stricter capital requirements everyone's been talking about, they could really shake things up for the industry. But didn't Bank of America say they're already prepared for those new rules? They made it sound like they're ahead of the game.
They did, and to their credit, they've been very vocal about maintaining a strong capital position. They've even run stress tests, simulations of extreme economic conditions, to see how their balance sheet would hold up. And according to them, they're confident they can meet those stricter Basel III requirements.
It's a bold statement.
Yeah.
Almost like they're saying, bring it on, we're ready. But honestly, with all the uncertainties in the market right now, it's hard to predict what the future holds, even with those stress tests.
Absolutely. It's a bit like trying to predict the weather a year from now. You can use all the sophisticated models you want, but there's always a margin for error, and the stakes are high. If those capital requirements turn out to be more stringent than anticipated, or if the economy takes a turn for the worse, Bank of America's capital position might not look as rosy as they're projecting.
Okay, so managing liquidity in a volatile rate environment, navigating new capital requirements, and keeping a close eye on those unrealized losses, that's a lot to juggle, even for a banking giant like Bank of America.
It certainly is, but remember, they're not just sitting back and reacting to these challenges. They're also making some pretty significant strategic moves, especially in the digital realm.
Right. Their digital banking strategy has been a big focus for them, and not without reason. They've mentioned that nearly 77% of their consumer banking customers are now digitally active. That's a massive shift in how people are banking these days.
It is. And this shift to digital isn't just about keeping up with the times. It's a key part of their strategy to become more efficient and control expenses, especially in the face of inflationary pressures.
And with technology constantly evolving, they have to stay ahead of the curve, right?
Hmm.
What struck me is that they're facing competition from all sides, not just from other traditional banks, but also from those nimble fintech startups that seem to be popping up everywhere.
You're hitting on a crucial point. The competitive landscape is changing rapidly, and Bank of America can't afford to rest on its laurels. They've got to make sure their digital offerings are not just on par with, but better than their competitors, both old and new.
It's like they're in a race where the finish line keeps moving further away. They have
Yeah.
to constantly innovate and find ways to differentiate themselves.
Precisely. And that brings us to a really interesting question. How does a legacy institution like Bank of America, with its vast size and complex infrastructure, compete with these agile fintech startups that are laser focused on specific niches and customer experiences?
It's a David and Goliath scenario playing out in the financial world. And I have to say, it's making the banking industry a lot more interesting to follow these days.
Absolutely. It's a dynamic time to be watching this space. But let's not forget about the other elephant in the room that you briefly touched on earlier, the commercial real estate market. This is particularly relevant to Bank of America given their exposure to office loans, a sector that's been hit hard by the shift to remote work.
Okay, so let's unpack that. How is Bank of America approaching this potential landmine in their loan portfolio?
Well, they're not sticking their heads in the sand, that's for sure.
So we're talking commercial real estate, specifically office spaces, and how this whole rise of remote work has turned this sector into a bit of a question mark for banks. How is Bank of America approaching this?
Well, they're walking a bit of a tightrope, that's for sure. But you have to keep in mind, we're not talking about a massive portion of their portfolio here. Office loans make up less than 2% of their total loans.
Okay, so a relatively small piece of the pie. Yeah. But still, with all the headlines about struggling office markets, it's got to be at least on their radar, right?
Absolutely. And to their credit, they're not just crossing their fingers and hoping for the best. They've been very proactive in reassessing their office loan exposures, adjusting valuations based on the current market, and even running stress tests to see how those loans would perform under different economic scenarios. They've actually been more transparent than usual about their office loan portfolio, providing additional details in their earnings materials.
Transparency is usually a good sign, right? It's like they're saying, look, We know this is a concern, and here's how we're managing it.
Exactly. They're showing investors and analysts that they're not shying away from this issue. Now, does that mean they're completely immune to any fallout from a potential downturn in the office market? Of course not. There's always a level of uncertainty.
Right, like that old saying, no risk, no reward. They're a bank. They're in the business of taking calculated risks.
Mm.
But it sounds like they're being pretty strategic about how they're managing those risks.
Exactly. And that seems to be a recurring theme with Bank of America, a balance of confidence and caution. They're delivering strong financial results, but they're also acutely aware of the challenges ahead. Whether it's a potential economic slowdown, evolving regulations, or this fierce competition.
It's like they're playing this high-stakes game of chess, always thinking a few moves ahead.
And that's what makes them so fascinating to analyze. They're like a microcosm of the entire financial industry, grappling with these large-scale shifts and trying to chart a course for the future.
So as we wrap up this deep dive, what are the key takeaways you want our listener to walk away with?
I think the biggest takeaway here is that Bank of America is in a strong position, but they're not taking anything for granted. They're adapting to a rapidly changing landscape, embracing digital transformation, managing risk carefully, and keeping a close eye on both the opportunities and the challenges ahead.
They're not just keeping their heads above water, they're actively swimming toward the future.
Exactly. And that proactive approach will be crucial for their continued success in the years to come.
Well, it's been fascinating to dissect all of this with you. Thanks for joining us for this deep dive into Bank of America's 3Q 2024 earnings. Until next time, keep those thinking caps on.